essentially, if she was going to list it with that agent, even if she got the 310 on the market, we all know that you don't just get what the property sells for, right? You get that subtracting closing costs, subtracting realtor fees. I think the national average for the cost of selling a house is like 11% or so, but she probably would have been walking away with around 270, around that mark, maybe a little bit more. And then she'd have to cut a check of 20, 30 grand in order for that transaction to go through. And her payments were only 1,300. So I looked at this, she didn't have any equity. I'm like, I would pay you 5 grand all day. And that means I'm paying way more than market, way more than what you were getting on the market, because you were going to walk away with 270. In exchange, I asked that if I was going to buy the property, come up to your purchase price and even pay you money, will you be willing to give me your mortgage and let me take it over? It's a very healthy mortgage. It was like 2 point something percent. It was a VA loan. And she said, yeah.
What's up, everyone? This is Niyi Adewale, and I am the host of the Ekabo Home Financial Freedom Mastermind Group. This group meets every Wednesday at 7 p.m. Eastern, and the members of this group are committed to achieving financial freedom while we're still young enough to actually enjoy it. So on this podcast, you're going to get VIP access to the conversations that we have about different forms of investment and ways to get your dollars working harder for you than you worked to first acquire those dollars. Our guest this week is the Mastermind Group. You're going to hear a myriad of voices, individuals talking about what they do in different areas of the country and how they're trying to get toward that financial freedom. And about midway through at roughly the 20-minute mark, please stay tuned, you're going to hear from Fade. Fade is a Pace Morby disciple, a Subject to wholesaler that did a deep dive on what Subject to is and how he's able to acquire properties for little to no money down. DJ, how you doing?
Good. How you doing?
I'm super good. Pat, how you doing?
Neil, what's going on, man?
Not much. Good to hear you, man.
Good to hear you too.
So we got a full house today, and we got a couple others joining. But
okay.
So this call is really for anybody who's joining for the first time, is to talk about different investments, what we each have going on, and see if we can't continue to collaborate and help each other to reach financial freedom. Because at the end of the day, none of us were put on this earth to work 80 hours a week until you retire at like 65, 70. So that's the goal. That's the goal of the group. And it'd be good to go around and kind of get everybody's background here. And I guess we'll kick it over to first. Do you want to tell everybody a little bit about what you do from an investing standpoint and what you're looking to do moving forward?
Sure. At the heart of it, I'm a wholesaler out of Philadelphia, mainly specializing in probates and that sort of thing. I'm also licensed in Delaware and PA, also specializing in probate. So that's pretty much my bread and butter. I have a few AirBNB arbitrage deals that I have, but outside of that, I have investments in medical marijuana, trucking, and some other things as well.
Nice. And Pat is actually based out of PA as well. Pat's a guy I used to play football with back in high school. Pat, do you want to give us a little bit about your background?
Yeah. So project manager, estimator for a high-end residential construction company. We've recently got into commercial work as well. So I am now partnered in, not an actual partner, but partnered in a marine development company. My main investment obviously was the purchase of my home in 2016. And then I've got weed stocks as well, IIPR, and a few other technology stocks that are not doing great right now, but that's besides the point. But yeah, that's about it.
That is fair. And Pat, for the group, I know you're looking to potentially get into some more real estate here in the future.
That is correct. I wanted to join the call to kind of give you an update as far as what work is taking me on, sort of a journey here. I might be moving to Florida. So yeah. So specifically in the Sarasota area, which is actually really cool because my sister's based out of Sarasota, but that would then open the door for me to have Philadelphia, my residence here, as a Airbnb and or long-term rental.
Okay. So Pat, we're definitely going to hit back on that because I think this gives you multiple opportunities, right? One, to your point, being able to rent out the home in PA, but two, being able to leverage another low down payment, 5%, 3.5%, to get another property in Sarasota, which is booming right now from everything I hear.
It is. And that's another thing too, where maybe I wait on that, sit on that until maybe a market transition, but not exactly sure because there are other close towns to Sarasota that I wouldn't be killing myself with a commute to an office every day. There's Bradenton and other towns as well. Clearwater. It depends on what I'm looking for and the condition of the property too.
Okay. No, we're definitely going to hold that and we'll come back to it. But I want to give some other intros. So we'll kick it over to Julian. Did you want to give an intro?
Yeah, my name is Julian Mills. I'm just an investor out in the Springfield, Ohio, right by Dayton. Primarily, literally single families, duplexes, and just recently am renovating a commercial unit. I'm a buy and hold investor. I do some flips, but I have 24 different properties, 30 something units. And so, yeah, that's me.
That is pretty awesome, Julian. That's kind of where I personally would love to get to with the commercial properties. When you say commercial, is this multiple residential units within commercial or something else?
So the current project that I'm doing right now is a mixed use property, 3 units upstairs, 1 commercial unit downstairs. Looking into creating salon suites down there. I'm just trying to gauge the market to see the feasibility of it, but then that will increase obviously the rental rather than having the commercial large area to where I can kind of get more rental income for smaller spaces. And so, yeah, that's kind of what I'm doing now. And I'm looking hopefully to get into a bigger apartment complex this year, coming up year. Probably Q3 or Q4, depending upon the success of the business.
Okay, so we're definitely going to hold a spot for that because I want to ask questions around funding for that and things of that nature. But kicking it over to, do you want to give kind of update on what you do around Atlanta?
Hey everybody, retired WNBA player. I'm out here in the Atlanta market / AirBNB as well, getting a bit into creative financing. So I know there are a couple of you on this call that are interested and are currently doing that creative financing that I have so many questions about. But yeah, that's kind of what I do. Flip, a little bit of flip. Try to keep me with the buy and hold, but always flip something. But overall, just love real estate, every part of it. And I try to learn something new every day.
Fair enough. And so kicking it back over to Julian. So you mentioned that you're trying to get into a couple commercial units. How are you funding all this? Do you pull in private investors or using hard money? What are you doing to fund some of these bigger projects?
I get very creative with it, to say the least. I go from private money to hard money and then just creative financing methods, owner finance. And I just kind of mix in a combination of all of them. And private money kind of helps me fund the down payment usually. Then I have hard money I have a great relationship with my hard money lender and he'll fund the rest of the deal. He'll do bridge loans for me based off of my equity positions. I have a line of credit, just a lot, just creative financing methods and whatnot.
I love it. I love it. We actually have somebody who's going to be joining here shortly who kind of, and please, Julian, let me know if you've heard of a guy named Pace Morby.
I have. He was actually on the Bigger Pockets podcast not too long ago. It was like 500 and something, but it was, I think, last week. But he talks a lot about subject to, and subject to I know is his big thing, but just the other stuff. Yeah.
Yeah. Subject to, novation, seller financing, and recently got in contact with one of his mentees. He has like a group of 60 people that join a mastermind with him, and they actually are moving down to the Atlanta area, and he's going to be joining here soon, and he can talk all through that, kind of what he was talking about as well, on what he does. I think he does a lot of wholesales, some flips, but he subscribes to the whole Pace Morby theory and has a lot of his resources available to him, which is awesome.
Yeah, I really was taking notes last time I seen that because I haven't done a subject to deal yet. I've done my very first deal was an owner finance, seller finance deal. And I got in and got paid to buy the properties. It was wild. And that was my very first deal. And that gave me 3 properties and they were all rented out. And I literally got that and a line of credit all off of owner financing. And I had no money in the deal. And I actually got $5,000 in my pocket.
That is crazy. Could you walk through that a little bit more? How did you negotiate that?
So I found an individual on the MLS. And what was crazy is I actually knew him. He was selling a package of properties. He had helped me renovate one of my properties, just a small repair. And he wanted 90,000 cash. That was it. So I told him, I said, okay, why don't you owner finance it for 90,000 and I'll pay you in 45 to 60 days. I had already went to the bank and said, hey, if these properties are in my name, would you refinance me? And they said, yes. So when we owner financed it or seller financed it, put it in my name, I went straight to the bank and the properties, I forget the valuation, but it was like 160,000. And I had another property already that I combined with it. So the loan value was 200 something thousand. So because of the valuation, I only owed him 90,000. I refinanced, paid him out 90,000. The bank did. They gave me a $35,000 line of credit and gave me $5,000 because I asked for 5,000 if they could give it to me. And then I had cash flowing rentals, 3 of them. One was a duplex that brought in over 1,000. Another one was, I believe, 550, and then the other one was 650. And yeah, and then from there I had them and didn't have any money in the deal and got a line of credit of 35,000.
Wow. Yeah, I definitely want to. That's literally kind of what me and were talking about after listening to that same podcast, is trying to get into more of that, because that's sustainable, right? If you're able to reuse your capital and kind of save and keep a lot in the pocket and get paid to close these deals, that's huge, man. That's awesome.
Yeah, and that I had no money. Me and talk about it all the time because I used to work in basketball and my brother knew her, and that's how we got connected when she got into real estate. But I had no money. And now my portfolio value of just rentals is like 1.75 million. And that's the total ARV of everything. And I built it with nothing.
And he did that within what, a year and a half or less?
Yeah, I got to 36 doors in a year and 4 months. And the reason why I didn't go even more was because the bank told me to slow down because they wouldn't refinance me. Actually put me in a tough position because I had bought properties cash and was going to refinance and get all my money back, expecting the refinance, but they told me no. So I've been sitting with these properties with cash, investors' money, and can't get a refinance until the start of the new year, because nobody could believe that I did what I did in such a short time.
And that's in a smaller market, right, Julian?
Yeah, the market is, I mean, it's a very small town. I got to look at the demographics of it, but I mean, it's a very small town and it's just where I grew up. But there's really the economic drivers are Wright Pat Air Force Base and a Division III college. And so there's stability in the market. But yeah, I buy properties for around 50,000 to 65,000 is the highest I ever buy. And $50,000 properties bring in over $1,000 a month for duplexes. And I got Section 8 tenants. A lot of people don't believe in that, or don't like it. But in most markets, they'll lose their Section 8 if they don't upkeep the property to a certain standard. And you get your check every first through the third, depending upon if it's a holiday or a weekend. But yeah, a year and 4 months, I went to 36 units and flipped 2 properties. And yeah, cash flow, usually around 1.5 to 2% per property.
Wow. And Julian, I'm just looking at the numbers. A $60,000 house that's bringing in $1,000 per month is, I mean, I'll do that deal all day. Now, I think you're paying the price because you're living in Ohio, but that's beside the point.
The catch is I don't. I live in Dallas.
Really?
Everything I do is remote.
Okay. So you have property management in place over there and team members?
So I have one individual that does all my repairs. He lives in one of my properties. When COVID happened, he couldn't pay the rent. So because he couldn't pay the rent, I had him start doing all of my repairs. So he kind of became my boots on the ground. From there, I just have a team of individuals based upon the level of repair. He does all handyman work. If it goes above that, we have one individual that does like HVAC, plumbing, and electrical. If it can't be done by him, it goes to my contractor that helps me do all my other projects. But outside of that, I actually bought the house of the individual that does the HVAC because he was in a bind for $18,000. His rent's for $600.
Wow. Okay. No, Julian, this is just, again, for some of the people that are just trying to get started, this just shows how you can leverage out a lot of these tasks. It doesn't have to be you, and it shouldn't be you going in to each of these properties and trying to, hey, I'm going to fix this. I'm going to manage all this stuff. You can literally leverage it out and use the resources we have among us. Fade, we're going to give you 2 minutes to finish whatever you're eating, man, and save me some. And I think that Julian just dropped a lot of knowledge bombs here. And now we're going to kick it over to my guy Fade, who's been walking me through some seller financing on the fly, and I appreciate it. I kind of gave people just a brief overview, but if you could give some of your background, what you're doing, and kind of who you learned from, that'd be awesome.
Yeah. What's up, everyone? My name is Fade. I am here in the DMV market. I plan to move down to Georgia. I was actually there a couple of weeks ago, and I'm glad now that I'm meeting, and thank you, Nee, for facilitating this. I'm meeting people that hopefully I'll do business with eventually. But here up in the DMV, I mostly wholesale. And I'm also a mastermind student for the one and the only, I'm not sure if everybody's heard of him actually, but Pace Morby. And he specializes specifically in creative financing and that kind of stuff. So I'm pretty well versed in creative financing, trying to get my reps up with it too. I actually just locked one up very recently, and that one I'm wholesaling off. But yeah, just kind of trying to do like a blend of wholesaling, creative financing. I'm doing my first flip right now. And yeah, just trying to find some type of balance and try to get my business to mimic Pace's business, which is what I think, in my opinion, is like the most ideal business out there. So trying to be more like him.
A couple questions came up just earlier in the call around subject to, and I know that you've had experience with that. Could you walk through kind of how you handle subject to, and then everybody else, please feel free to ask whatever questions you have, but can you walk through a recent subject to deal?
Yeah. So one deal I always like talking about is this one woman that I bought a property from. She essentially was going to get foreclosed on the next day. I got in contact with her. I drove her over to the bankruptcy court, and we filed bankruptcy to stop the foreclosure and canceled that. And she essentially had a property that was maybe worth like $320,000, $350,000. She had a terrible agent that didn't do a good job selling the property. They tried to sell it for like $310,000 or so, but she had a balance of $300,000 and or thereabout. And sorry for all the numbers, but essentially, if she was going to list it with that agent, even if she got the $310,000 on the market, we all know that you don't just get what the property sells for, right? You get that subtracting closing costs, subtracting realtor fees. I think the national average for the cost of selling a house is like 11% or so, but she probably would have been walking away with around $270,000, around that mark, maybe a little bit more. And then she'd have to cut a check of 20, 30 grand in order for that transaction to go through. So in that case, the realtor wasn't the best option, even though that's the most conventional option. In her case specifically, it wasn't the best. And also that realtor, while not attending showing, they literally just posted terrible pictures that they took on an iPhone online and put up a price of 310. And she never saw that realtor again. And that realtor was basically guiding her into foreclosure because she thought it was selling and nothing happened. So I reached out to her. She told me her story. I stopped what I was doing, drove her over to the bankruptcy court, canceled the foreclosure. And I looked at the numbers. I always ask my sellers to show me their mortgage statement so I can see what I'm working with and see what options I could present to them. And in this particular case, she didn't have any equity. She needed $5,000 to move. And again, like I said, if she went with the realtor, she would have had to actually cut a check to allow that transaction to go through. So what I did with her was that after looking at her mortgage, I saw that her mortgage at the time was like $1,374. And I'm not sure if anybody here is in Maryland, or knows about Maryland, but it's in Laurel. And that's a really, really hot market here in Maryland, in the DMV. Single family, like a cute little rambler, and her payments were only $1,300. So I looked at this. She didn't have any equity. I'm like, I would pay you $5,000 all day, and that means I'm paying way more than market, way more than what you were getting on the market, because you were going to walk away with $270. In exchange, I asked that if I was going to buy the property, come up to your purchase price, and even pay you money, will you be willing to give me your mortgage and let me take it over? It's a very healthy mortgage. It was like 2 point something percent. It was a VA loan. And she said, yeah, that like, as long as I can pay her the $5,000, then that was cool. So took that property, bought it from her. It took like maybe, I think it took, the property took forever to close because she was super lazy. She didn't want to sell and she was in a tight bind, but same woman that was about to get foreclosed on, she wasn't doing anything, wasn't responding to the mail coming from the bank and anything. But with that also came that she couldn't afford to buy another property or really rent in most places. So I had to move her out to this really remote place called Cumberland, and she wasn't applying for property. So I literally had to apply for her. Her car got repossessed, so I had to drive her up to Cumberland, like a 2-hour drive. So it was a lot, and the deal got drawn out. It took about a year to close. But again, because the deal was so great, and I'll explain why it's so great, I stuck with it, kept on working with her. So in the end, we close on it. She moves out. I move her into the rental. This property, I just painted it and redid the flooring, restained the flooring. I changed out the carpet. The same property, I got it for $1,300. The payments ended up reducing down to $1,250 once I changed over the insurance. But that property rents out for $2,500. So I'm essentially paying half of the rent and debt service for just paying the owner $5,000. $5,000 out of pocket plus closing costs. Closing costs is kind of expensive here. It came out to be like $10,000, but $15,000 out of pocket, pay for paint, doing the flooring and everything. And essentially I am making $1,250 a month, which is about $1,400. And just like the last person that talked, minus Section 8, I have never had to barely even talk to her. And the cash on cash for deals like that are ridiculous, where there was no equity in that deal. But again, it's a great market. I bought it at the beginning of this year, checked for about $300, like I said, checked a couple of weeks ago, and same properties are selling for like $450 right now. So not only did I get extreme cash flow, not having to do a credit check or file the paperwork for a mortgage. She literally just handed me over the mortgage. I logged in and now I pay it. But I also got a ton of equity and it's growing, right? So PACE teaches us how to look for these types of transactions, look for these deals. And believe it or not, there are more of them out there than traditional cash sales. And what ends up happening is that you spend the same money out of pocket to buy properties that the ARV is way higher than all these remote markets. You end up spending the same out of pocket, but you get the ability to get that appreciation as well as the pride and ownership of owning a property in like a great market too. So yeah, that's basically what a subject to is.
Wow.
I have a quick question.
Please.
Yeah.
I didn't hear you discuss curing the debt. I'm assuming if she was being foreclosed on, she was behind.
Yes.
As far as catching up on the payments. Yeah.
So typically you have the option of paying and carrying that loan. For me, she was behind like 25 grand. She hadn't paid in like 2 years. For me, I did not want to do that. I didn't want to come out of pocket with that. So I did a loan modification with her and essentially got that balance tacked onto the back of the loan and got the whole thing switched over. So now there's a deferred balance again, or not again. I haven't mentioned this, but deferred balances are great because they're non-interest bearing and you don't have to worry about them until you want to sell or you want to refinance. So about 80 grand of my loan is non-interest bearing and it's indefinite until I reach that point where I want to sell it or refinance. So it's basically, I'm not paying any mortgage on that portion. I'm only paying mortgage on like 210,000 and it's just sitting there.
But is that a second mortgage?
It's a second mortgage. It's called a deferred balance.
Okay. So at the end, if you choose to sell, you're paying both of those, the first and second mortgage. Okay.
No, I'm not paying it. My tenant's paying it. I'm never going to sell that property.
Exactly. So you'll never pay. Okay.
Yeah. So it's essentially, he calls it buying properties for free.
Yeah, man, I'm intrigued. And when I listened to that Bigger Pockets podcast and I woke up at one of my early shifts that I do daily, I literally got the video and actually I watched it that morning. I called you like as soon as I was listening to it because Pace talk about so many great things in creative financing that number one, it allows anyone who's getting into real estate different methods to get in, whereas you, again, don't use cash. I mean, you sometimes have to use cash, but you don't need credit. You don't need the bank. You don't need hard money. But there are ways where you could use little money in order to get a property. Yeah, so I began my real estate journey with wholesaling, which again, you don't need credit or financing. It's essentially you having a motivated seller get into their pain points and knowing exactly what they need in that moment, drawing up a contract with them, having an end buyer and someone who's either buying in the area or who wants that property, and you pair those two and you make the funds in between. That's essentially what wholesaling is for everyone. But I love every bit of seller financing and I'm putting it into motion. And we definitely are going to have to talk after this because it makes me happy. It's crazy. But
the best part too about creative financing, you do not have to, you're already wholesaling. You do not have to change up your marketing. In fact, I guarantee you, I don't know how many leads you have in your system, but I guarantee you, probably, I want to say maybe like 20-30% of them are probably going to be eligible for, if they're truly motivated in that type of stuff, they're probably eligible for some type of creative financing method. And it would probably be better versus cash, where the ratio is way smaller, right? It's actually very, very, it's way less common to get somebody that cash is going to work for because you're taking a chunk of their equity, right? While in subject to, depending on where their mortgage balance is, you could just take it over. Or if they don't have a mortgage balance at all, you could actually pay them at market, if not more than market value, like you said in the interview, but you buy it on terms. You buy it on seller financing. I was walking Nee through. And then there's a situation where I'm pretty sure you heard in the interview as well. There's a hybrid of two models of the two where you can take over somebody's mortgage. And if they have a significant amount of equity, you can also create a second note around that equity, directly paying to instead of paying it to like the bank, the mortgage that you took over, you pay that equity to the owner over time. And you essentially do a hybrid, a combination of both models.
That's amazing.
Yeah. So but like I was saying, you don't have to change your marketing. It's really just adding tools to your tool belt and then being able to recognize when the tools are useful and what situations the tools might work best for, and then learning how to pitch it to the seller so they feel more comfortable. Does that make sense?
It makes a lot of sense.
Definitely going to connect, Fade, you and me after this, because you mentioned you may be moving down to Georgia, and we hope you do. And is crushing it from a wholesale and flip standpoint out here. Actually working with her on a couple projects now, so it's going well. And Julian, you said you may have had a couple questions on subject 2. Was that solid, or did you have any follow-up questions?
Oh, no, I have a lot of questions, but I would have to connect afterwards, because I love the last thing that you said about paying them back. I would kind of want to know more of that part, because the equity part of how you can do that is very intriguing to me, because I usually use that for private money, like with my own deals, but learning how to use that with subject to and how to pay people back that way. But yeah, no, I got a lot of questions. It kind of made it work.
Hopefully over time we could get those answered. Switching over to, we mentioned there's a couple people on this call right now that wholesale in Georgia. I know your operations right now are mostly in the Northeast, but I believe you're looking to expand into Georgia, correct?
Yes. Mainly just specializing in probates. That's normally my source. So I'm trying to learn the counties. I'm trying to learn the areas quickly as I can. I'm starting with Atlanta.
Fair enough. Anybody have any advice or tips for Kwame getting started in the Atlanta market with probates?
I would say in any market, you definitely want to go to the courthouse. You go to the courthouse, you see who that executor is, you reach out to them. If they don't have a realtor, you reach out to them directly. There's a whole system of if they have an executor, or if, of course, you have to figure out who the house goes to. That's where it kind of gets tough. But your number one thing is going to the courthouse, and you'll be able to get all the information you need. And when you get that information, actually, before you even get that information or during, how you also get probate deals is by reaching out to probate attorneys. And sometimes they have deals already in the works that are kind of at the end, where they usually try to appoint it to a realtor, and that's where you can kind of get in on the probate side. But it could be a drawn out process. And if the person who has passed away has everything in order, it could be an easy process, but it definitely, most cases are drawn out. But it's always about establishing that relationship and being sympathetic to the situation and waiting it out, not pressuring them. But it's a great avenue to wholesale. It's a great avenue to get a cheap flip. And it's a great place to be in. But like I said, it could be drawn out, could be it's a hit or miss. But you reach out to those attorneys, they deal with probate all day, and they have a list already. So yeah.
Thank you for that.
No problem.
Okay, we're coming up on 2 minutes before this Zoom ends. So I wanted to hit 2 self-serving things. One, Julian, definitely want to connect with you to figure out what returns these private investors are getting. That could be a potential of putting some money into a deal. Would love that. And then 2, I am a realtor in the Atlanta area. So if you know anybody, or you are looking to purchase a property that's on market, not any of this seller financing stuff, because I ain't getting paid for that, hit me up. I think there was a hand raised. Bade, go for it.
Yeah, I wanted to kind of piggyback on the whole probate conversation and talk about probate attorneys, because PACE also talks about probate attorneys and teaches us how to approach them. Now, full disclosure, I personally don't do this. I do have probate contacts that send me leads, but I didn't get them through this method, so take it with a grain of salt. But basically, PACE says that probate attorneys get hit up by investors all the time, right? And we all know when somebody's dealing with volume, you have to learn how to differentiate yourself from the crowd. So what PACE talks about is that you would essentially go in, tell them that, hey, we do so much more than buy properties, right? We're not only a real estate investment company, but we're also a real estate solutions company. If you need anything like cutting grass, a locksmith, a bulk dumpster removal, we're the people to call.
Thank you so much for tuning in. That was our episode with Fade, as well as the rest of the Mastermind Group. If you found this insightful, please hit that subscribe button on your favorite podcast channel and also leave a comment and review. We're trying to continue to craft this to make the content that's valuable for you to reach that financial freedom and your goals. And so on a weekly basis, you can find us. Thank you. Everybody have a great week, and we'll catch you next week.